Well, Mohamed El-Erian, the CEO of PIMCO, the world's biggest bond fund, predicts that Europe will slide into recession next year, taking down advanced economies with it, all unless government leaders find a way to contain the debt crisis and contain a bankruptcy of Greece. For more, we are joined from the New York Stock Exchange by the Bank of New York Mellon's Chief Global Market Strategist, Jack Malvey. Jack, good to have you back on the program. And we were talking about this timeline that European officials have put together, basically saying in the next 6 months, or 6 weeks, we need to find a way to solve this Greek crisis. Are the markets going to wait that long?
Well, they have no choice, and of course, the sooner the better, because this has been going on for the last 2 years. So hopefully it is resolved largely over the course of the next 6 weeks, and by resolution, not everything completed, but just some outline of exactly how this will be done.
Well, what do you want to see, or what do you think investors have to see in order to feel like the officials have this under control?
Well, I think we need to see exactly what's going to take place with Greece and some of the other entities in Europe which are at the risk of, unfortunately, following Greece into some type of rescheduling. And then we need to see what sort of salvation we can have for some of the national banks that have been afflicted with too high government exposure.
Right. So we need to see, A, whether or not Greece is going to default or not, right? And B, whether or not the European officials can ring-fence a default of Greece away from the banks. That's basically what you're saying.
Exactly.
Okay. So in the meantime, then, what do you expect the markets to do, Jack?
Well, I think that we've seen the pattern over the course of the last several weeks. 2 weeks ago, we had a positive week on some conjectures that things were going to be resolved sooner rather than later. And, of course, last week, the exact opposite. This week, as you know, in Europe is opening more firmly on the expectation that there'll be some additional details of some type of rescue package. And I think we'll see this oscillating pattern over the course of the next 6 weeks or so.
Then what's going to calm this volatility? What's going to take this volatility away then?
Well, I think there's so many elements. We have Q3 earnings. We have some fundamentals, which on a global basis may be a little bit more encouraging. But ultimately, as you highlighted at the beginning of the show, it is really some detail exactly what and when is going to take place in Europe to contain this European contagion, which has been hovering over markets for the last year.
Right. And is there any case at all, Jack, for a rally in these markets when you have people like Mohamed El-Erian saying that, look, this economy, this global economy is at risk of a recession?
Well, he's exactly right. It is a risk of recession. But there are those who look back to 2008 most recently and recall that the peak of the concern was right around September through really January, and
right.
Those who actually bought at the bottom in the risk contagion apogee were actually well rewarded. So there will be some of that sentiment that enough is enough. And probably before the end of this year, we'll see some firming tone on expectation that 2012 might see some glimmers of recovery before the end of the year.
Well, what tells you that?
Well, basically long-term capital market history, and also it is the case we've been 5 months in this bearish trend. We're due for, at some juncture here, a respite in the other direction. And it is the case when we look at the global security choice set, it's very broad. Equities, all sorts of securities certainly can be afflicted by European contagion, but fundamentals in many entities are better than suggested based on this sort of macro contagion, which is sweeping through the markets for the second time now in 3 years.
So, Jack, are you saying that you see some sort of bottom then going into the end of this year in the markets here?
I would think some bottoming, some reach for equilibrium for risky assets, and some expectation that 2012 likely will be hopefully a better campaign for risky asset performance.
Okay, Jack, thank you for joining us. Jack Malvey there from the New York Stock Exchange.